we should try, because when it comes to investing, we always want to be thinking ahead. And if you want to get free tokens, you can come over to Bybit, answer some questions, win a share of 36 million PEPE tokens, and also a Yieldnest NFT, which will give you exclusive benefits in that ecosystem. So come along to our website. If you're watching on YouTube, you might need to click over to the Bybit website and answer those questions. You can be in with a chance to win. And if you sign up to $5,000 worth of USDT, it's going for new signups today. Okay, so CryptoCobra, maybe you could help us out with the next phase of this conversation, which is ETH beta. So these are projects that are built on top of ETH, like Yieldnest, Frax, L2s, right? And these will, well, they may benefit from increase in ETH price. So if say ETH increases 10%, some of these might do 20% or more. Okay, so that's ETH beta, right? So CryptoCobra, do you have a favorite ETH beta? Or if not, how would you select one?
So there are a lot of layer 2 crypto coins out there. So my overall favorite below Ethereum is actually Polygon. And then you have several others. You have Arbitrum is one very big coin there. But these are kind of, they also have, some of them also have their own chain. So it's kind of, Polygon has a smart contract on the actual Polygon network itself. And then they also have kind of a contract on the Ethereum chain. So it's kind of, if you are new to crypto, it's quite hard to get your head around it, but it's kind of, yeah. So I think the price of one coin can go down while Ethereum goes up, and let's say Polygon can go up while the Ethereum price goes down. So it's, I don't see quite a huge kind of connection between them, but Ethereum is one of the biggest chains out there. So a lot of new coins are created on the Ethereum chain. In the past, we had a lot of meme coins created on the Ethereum chain. Now, people are kind of switching over to Solana chain and even some other chains there too. So not only on the Ethereum chain. So yeah, hope that answered the question.
No, that's great. Thanks so much. And Emily, maybe you could tell us some of your favorite ETH beta plays. Not financial advice. This is stuff for you to just check out. Yeah, what are you watching in the ecosystem?
I mean, the ETH ecosystem. I'm still very exciting about EigenLayer, about restaking. Yeah, because it sounds very simple. Oh, EigenLayer is protocol like based on Ethereum, and it's a restaking protocol. But if you think about it, it gives you a solution that you can stake your you can take your staked ETH and stake it once again. So which means it increased the liquidity of the ETH staking significantly, and also the introduction of EigenLayer ABS is reduced the criteria and the barrier for developers to develop based on the ETH ecosystem. So definitely we can see a lot of like supply side coming out, and on top of that, the demand side, that if you stake your ETH and you can restake your ETH and earn some rewards. So it's a full cycle loop. So I still think restaking is the future of Ethereum ecosystem. And yeah, I think for now, we see many good projects working on this, like say, for example, PEPE, Renzo, EtherFi. Yeah, but I think there will be more and more protocols built on EigenLayer and can maybe give us more, the most exciting things to play around with.
Very cool. Yeah. So yeah, the liquid restaking or the restaking in general is like an entirely new development. We have no idea how valuable this could be. So yeah, definitely worth getting to know and checking out. And on Bybit Web3, do we have a way for people to do that, Emily?
Yes, it's still on that session. The earn staking session.
Right, yes. So we can go onto the Bybit earn section and you will find liquid restaking options there. And there's some very like high yield there. And we might be getting some people in.
Yeah, sorry. And usually Bybit Web3 will have some like exclusive benefits we earn from the partners and will give us users extra bonus on top of the native yield.
Great, that's very cool. Okay, so I just have do guys keep your questions coming in, because we're going to have a little chat now. I see, yes, we've got some questions coming through. So yeah, do keep them coming in, and new signups today up to $5,000 in USDT for you, and extra prizes for people who come in and answer some very simple questions down below on this video on the Bybit website. So here's something that I wanted to ask you guys, because I think, there have been some difficulties in crypto recently, and one of them is this whole high FDV, low float thing. And that's the idea that maybe people are like perhaps getting a bit disenchanted with governance tokens. And I know Dio, and I think you as well, Sam, you're very bullish on the OG DeFi protocols like Curve and Aave and stuff like that. And they've been struggling recently. And some people say that's because the tokens don't actually really accrue any value from the protocol. So while the protocol might be profitable, token holders don't really share in that profit. And that could be a regulatory issue, or it could be a design issue, and it's something we hope might change in the future. But at the moment, I feel like that might be a little bit of a barrier for some people engaging with some of the protocols that you really love. So I'm very interested in your take on that. If you have any ideas.
You want to go first, Sam? Shall I go first on that one?
Well, I'll go first. So first of all, yeah, I think as DeFi OGs, we obviously do have opinions here, but I actually correct you on a little bit, but I which is like Frax, Curve, Convex, like FXS controls everything in the Frax ecosystem. It should listed on Bybit, it's great. But we do distribute yield. In fact, if you stake it as VFXS, the rewards that come from fees that are sustainable, it's not token inflation. You actually do get a share of all of them, which is great. Where my FXS is, a lot of people stake it, and there's other places like Convex that you can stake with them, and then they give you a CVX FXS token. Curve is like that too. There are tokens, like you're saying, that sort of have this, like Uniswap is the most famous one, right? It's the biggest DeFi protocol, yet it somehow just never seems to give any kind of ownership or fees. And so I think that there is a big difference between those two tokens. And I think once, the ETH ETF is out, there's more excitement and things flowing to DeFi. All these tokens like FXS, CRV, CVX, DeFi OGs like, Aave, for example, all these tokens like SNX from Synthetics, all of them will have a really big resurgence, right? And so people will realize that there is actually a lot of sustainable cash flow that's distributed. But I'll give it to Theo.
Just want to follow up. So I've got a follow-up question on that, which is, doesn't that, are you concerned that might make FXS, which is your governance token, which earns the yield, as you said, are you concerned that might put you in the crosshairs of some regulators who might consider that a security?
No, actually, the cool thing is that because everything decentralized in the sense that there's no Frax company, there are Frax core developers, of which I am, and there's a lot of the world. We have like 10, 11 core developers, and there's people joining and contributing and everything. I think it's pretty clear, especially now after the ETH ETF, right? Maybe it wasn't as clear, right? But especially now that we're discussing the ETH ETF, which does have effectively a buyback and burn, right? Which is like people pay gas, and then that goes to burn ETH, which is the same mechanism as a stock buyback. Which, what does it do? It takes cash flow and it buys stocks, right? In a company, right? When a company buys its stocks back, and then it burns them, right? It's them out of circulation. If ETH is not a security, right? And if there's a decentralized protocol like Curve or like Frax that are doing a similar decentralized algorithmic mechanism like this, and the protocol is decentralized, there's not a corporation, there's not a headquarters, it's not something that is has a bank account, right? It's totally decentralized. It has its own blockchain. It lives as a blockchain and a protocol. We're actually the least concerned we've been, honestly, since the launch of Frax, because of the ETF, right? Because of the fact that there's more and more clarity coming. That it's possible that things can change, but right now they're changing for the better. So I actually feel much better than especially after the ETF decision, which again, another downstream effect of why it's so bullish. Not just pensions, not just inflows, not just everything, but so much sentiment change around that single decision.
That's fantastic. Yeah, well, I'm really glad that you feel that way, and that's great to hear. And also, if anyone is interested in purchasing the FXS token, you can do so on Bybit. And we also have over 1 million tokens across 9 chains on our DEX Pro, which is on Bybit Web3. So once again, if it's a little bit complicated to navigate DeFi directly, you can go to Bybit Web3, and we've laid it all out there. We've collected it all. We have over 1 million tokens, and it's all there for you with explainers, things. So yeah, definitely worth checking out. Dio, I got a question from the audience, so do keep those questions coming in, guys. And the question is, what makes restaking on EigenLayer more profitable for your ETH?
Yeah, that's a very interesting question to kind of follow up a little bit of what Sam said, and in the decentralization part and the revenue part. I think FXS is basically this revenue generating token, and it's a protocol, and it's not only the Frax team working on it. Like, I mean, Yieldnest will contribute to it. Curve is contributing to it. Frax is contributing to Curve. Curve is contributing to Frax. Like, it's this whole mesh network that's kind of existing, Hive brain. So and there's real revenues in these protocols. Frax, Curve, Convex, all these protocols are generating real yields, right? Segueing into restaking and EigenLayer. So how you can see this, like, normally if you have ETH, just naked ETH. Naked ETH is like the native ETH without staking it. It's like Bitcoin, right? And if you then stake it, you're actually securing the network. So you're earning this yield while staking and securing the Ethereum. With restaking, and not only with EigenLayer, there's also other restaking protocols that Yieldnest will plug into on a vertical level, where we're now looking at EigenLayer, which is the furthest along, the first mover in this space. Also looking at Nectar and at Symbiotic. So these 3 restaking protocols, we're all hooking into it because it's such a fast moving space, where before we saw only this Ethereum network that you can secure. But now with that same token, you can actually underwrite 3 different protocols: EigenLayer, Symbiotic, and Nectar, and many more things in the future. So that will obviously translate in a higher yield than that base Ethereum yield, right? So if you just hold ETH, and if you're bullish on ETH, hold it, play it, like have that asset, and you should get the maximum yield on your ETH. And that's with Yieldnest. With Yieldnest, you can get exposure to EigenLayer, Symbiotic, Nectar, all these restaking protocols you can get exposure to in a single, via a single protocol, basically. And in the protocol, when we do ETH restaking, you can even restake Frax assets also in the future, where we're working on a YN USD E and USDS kind of asset that kind of wraps around the Frax stablecoin, wraps around the Athena stablecoin, and you have like a stable exposure to a stablecoin, plus all the underlying yields of restaking and all the underlyings of that stablecoin. And also with the ETH YN LSD, you get exposure to like stake Frax ETH and the underlying LSDs in that kind of restake basket, and you get exposure to these restaking protocols, which will eventually then translate into more yield. It's still early days, so the yield is not like 20 or 30 or 200%, but it's a higher yield, and it's something that's going to be very big in the future, especially from an institutional level, for example, where right now actually the staked Frax ETH liquid staking derivatives is the highest yielding staking derivative with around 3.8% yield. And then if you wrap that in a restaked version of that and make that liquid, you can then do other things with it. You can go to liquidity pools, you can like compose it, but then your risk curve goes up a little bit, and it's kind of depending on yourself how much risk you're willing to take and how much yield you want to get. You can get up to maybe 10 or 20% if our pendulum markets go live, and on the Frax lending market you can leverage up your yield. So it's kind of up to the user how much risk he wants to have. Yieldnest kind of gives this pure risk adjusted kind of very stable restaked asset, and then a user can go up the risk curve how far he wants to go. So yeah, it's up to the user.
It reminds me a little bit of the dividend ETFs from traditional finance, where they sort of collect all the dividends from all the different companies, and then they sort of package them up and then like pay them out to all the holders. So it's like you're talking about that, but you're like combining dividends on dividends to make a fractal like Sam's. Okay, so I'm afraid we're going to have to start wrapping this up. This has been super fun. Before we finish, can you guys give me a number? Okay, just one number. The price of ETH on December the 29th, 2024. CryptoCobra, what's your your price prediction? Okay, you're muted, sir. You're muted.
So at the moment, the price is kind of $3,450. I think at the end of this year, if everything goes in place and the actual ETF comes and it gets mass adoption on not only crypto exchanges, but also the other people that have a lot of money on the stock exchanges, I can think Ethereum can reach $10,000 in the next, but this is not financial advice, okay? Just my personal opinion, because when people build on Ethereum chain, it gets bigger and bigger and bigger. And if you can't even have all the tokens that's created on Ethereum chain on one hand or two hands, not even, it's a lot of tokens on the Ethereum chain. If you want to see all of the tokens on the Ethereum chain, you can go into Etherscan, you can check it out yourself. There are a lot of tokens there. So yeah, I think 10,000 is...
Okay, wow, that's great. Emily, what do you think?
Okay, this is my favorite part, brainwash myself. So probably at the end of this year, I hope it hit, okay, give you a range, maybe 6,666 to 8,888. Yeah, my favorite level.
Nice. Dio.
Yeah, thank you. I actually made a prediction on this on the Ivan on Tech channel, and I also have a blog post on our Yieldnest Medium, where I outline my exact cycle predictions for this cycle. Interesting to note is that in 2019, I had a DeFi fund where we were managing a DeFi fund, and I almost perfectly timed the 2022 cycle, and it's also recorded on video. And it was a very simple kind of calculation that I did. I looked at historical data, I looked at cycle repeat data, which you can just find in most of these charting websites. I'm not a big trader myself. I'm more of a cycle or of like a wave kind of analyst. And then I base it on deep technical research. And I don't look that much at charts. I mostly look at like fundamental research and cycles and waves. And from that research, I kind of made the prediction that my conservative price target, and it's not at the end of this year, it's probably going to be a bit overflowing. So probably mid next year, I would say. My conservative Ethereum price cycle target is $12,000. My neutral bullish one is around 19, and my optimistic like super bull cycle is 30K. So I have quite a range of targets there, and I did think quite deeply about this, and I hope. I'm quite certain. Like there's no certainty, of course, that we're going to reach these kind of price targets, but we're going to see for sure another cycle. And super cycle. I actually not want to say that, but everybody always talks about these things. But I don't. That's like dangerous. If people talk about super cycles, you normally should sell your assets. So I'm not going to say that, but I do feel that this is like the build up towards this cycle and this momentum that you're building up in the market. Make very bullish on ETH, and I think that all the shit coins or all the meme coins or all these new like kind of things, the shiny objects, watch out with that. Just look into the things that are real, that are building for many years. You can actually look into the GitHubs, you can look into the code, you can look into what they're building. For example, it's building so hard with its team. It's very impressive, and Curve and Convex and all these other Aave, all these blue chip protocols. Look into that. There's been a lot of effort in the space, and yeah, just look at that. Look at what's real, and ETH is real. Like the blue chip kind of DeFi protocols around that are real. If you position, I think, yourself into that and ride that cycle, get the maximum return on your ETH with something like Yieldnest, combination with Frax, Curve. We kind of give exposure to all of that. You can get maximum return and ride that cycle. It's probably better than trying to trade it. I got into crypto in 2012, like myself, and if I would have just holded the ETH and Bitcoin that I had in the beginning and just did nothing, I probably would have done better than now. It's the biggest advice that I would have is that humans are not really good at exponential growth thinking, and I do believe these price targets are realistic this cycle. Let's see. Exciting times.
That's amazing. Yeah. Always good to buy and hold. Sometimes it's the hardest thing to do. Sam, very quickly, we're running out of time. What's your price for the end of the year?
Well, I just want to say, not trading advice. I build stuff. I don't trade. I'm not good with prices, but I will say that for the end of the year, I think over 9,000. So over 9,000 ETH. And then as Dio said, if you think about how that beta plays, right? That's only a 3x, which is amazing, right? If that's right. But then think about it for protocols, for example, like Frax, where the TVL of staked Frax Ether in dollar terms will 3x, right? How does that actually affect the FXS price? Probably more than a 3x, right? And think of like where Yieldnest has all of these different LSDs and LRTs, right? If ETH 3x's, Yieldnest TVL will 10x or 20x in dollars, right? And think about what that says about the actual value of the Yieldnest token and things like that, where we're talking about ETH beta, you have to see, well, a 3x on protocols that actually have deep integration with in terms of TVL, those could be 10x or 20x. But again, I don't even know if that's the right price because I don't trade, I build, and so, but that's my take in terms of that's what I hope to see.
That's awesome. Wow. So yes, big numbers, not financial advice, of course. And just before we finish, we have a few winners of the Yieldnest NFT. So holders of this NFT will be entitled to a 15% boost on their Yieldnest seeds. So to find out more about that, you might need to go check out the Yieldnest website. So winners are a username, risk management. So nice and cautious individual. I like that. I'm going to struggle to pronounce this. I'm going to say Rathdan. You're a winner, mate. And also someone who's remaining anonymous, but the first three letters are Ron. So yeah, we're just highlighting Ron there. So you are also a winner. And do come along and check out our website. Answer the questions below. 36 million PEPE tokens to give away. And yeah, so I feel like that's a wrap, guys. So thank you so much for joining. We've had Sam Kazmian from Frax, Amadeo Brands from Yieldnest, CryptoCobra, Emily from Bybit. I've been Nathan, and thank you so much, and see you next time.
Thanks, everyone.